The biggest financial news of 2021 is all over the headlines right now. It has nothing to do with the stimulus, has nothing to do with Tesla or Bitcoin. It actually has to do with this tiny company that's not so tiny anymore called GameStop and what is happening with their stock. I'm going to explain that and more coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. I'm going to explain what in the world is happening to GameStop right now and why it is the biggest finance story of 2021. And guys, it's just changing by the second here. But before I do, I want to explain something so we're all on the same page what shorting a stock actually means. So if you are out there buying and selling individual stocks as opposed to buying an index fund or buying a mutual fund, if you're buying individual stocks, we've said before, I hope you've done the research. I hope you have done all the analysis that you need to, and you've talked to all the right, the industry experts and everything like that, because when you buy a stock, an individual stock, it can absolutely go straight up to the moon, or it could lose all of your money, right? So in a way, buying just an individual stock is in a way like gambling, as opposed to buying a basket of great companies that you intend to hold for the long term. Well, let's say you're wanting to gamble in the stock market and you believe that a certain company is going to go down in value, that the stock is going to go down in value. And again, hopefully you've done all your research and everything like that, but you believe so much that the company's going to go down in value that you actually want to win when the company loses. So the way that you would do that, you could do that with options and other things like that, but one way is to short the stock. So what do? You in a type of margin account, a type of investment account that you set up, you can actually borrow someone's shares and you sell them on the stock market, okay? You sell those borrowed shares, and then when the price goes down, because again, you're expecting it will, you then buy the stock back. And if you sold it at 50 and you buy it back at 40, you made 10 bucks, and then plus or minus what you have to give, what you owe the person that you borrowed the shares for. So you're making money when the stock goes down. Well, that's great if the stock goes down. What happens if it goes up? And what actually happens? Well, so let me just stop right there. If the stock goes up, if you sold it at 50, and at some point, let's say the stock goes up just a little bit to 55, and you say, you know what, maybe this thing's not going to go down in value. Let me get out of this position. Now you buy it back at 50, okay? You sold it you buy it back at 55. You sold it at 50, you bought it back at 55, you lost $5 a share. And you would just have to come up with that out of your proceeds, or out of your resources. You lost money. So not that big of a deal when it's a 10% loss like that. However, what if you've shorted a stock and you believe and you bet it's going down and it starts going up and up and up and up and up and up? They call that a short squeeze, because you then, to close out your short position, you actually have to buy the stock. You've got to buy it at some point and say, okay, enough already. I thought this thing was going down. I sold it up here, and it's way up here. I can't even do it in the screen here. It's way up there. I've got to buy the stock and just get out of this position and take my huge loss. Well, when you buy the stock, that creates more buying pressure, pushes the price up higher. But you alone don't do that. So what if there's another person that shorted the stock and they now have to buy it again? And another person that shorted the stock, they now have to buy it too. And another person, they have to buy it. All that buying just to cover the shorts pushes that stock up through the roof. That is the short squeeze. That is what's happening with GameStop. I'm not going to explain. This company is the Blockbuster of the gaming world, basically. It's a retail place for video games. You don't need that anymore. And they haven't totally gone the way of Blockbuster yet, but I think the prospect on this company is negative. In fact, CNBC, they'd said it through FactSet, but CNBC says this is the most shorted stock in the stock market. 138% short interest. So many people are betting on this thing going down more than the entire company. So 100 more than all the shares outstanding. I don't even know how that's possible. 138% short interest. This is the most shorted stock out there. And then Reddit and a bunch of that following decided to jump in and say, no. We're going to make this thing go parabolic. A thread, a community within Reddit called Wall Street Bets got in cahoots here, at least it seems, and started pushing the price up. The stock had to pause trading on Friday because it went up almost 70%. As I'm recording this, right before when I said, okay, I've got to talk about this on today's video, before noon, this thing was trading up another almost 50%. Now it's only up about 20% at the time I'm saying this. It could be down by the time you're watching this. I don't know. This thing's moving so much. It was up 69% on Friday. They had to stop trading. And today it was up another 50% because this group started bidding the price up and all these short sellers started abandoning their position and and buying to close out their position, and that buying continued to push the price higher and higher and higher. Wow, that is confusing, but that is the risk. That's the risk with owning an individual stock, but more specifically even shorting an individual stock. Theoretically, if you short a stock, your loss could be infinite, right? The stock price. So if you buy a company, and let's say you buy a company that ends up going bankrupt the next day or whatever, and you lose all of your money that you invested in. Okay, so that feels awful, but there's at least a floor. Theoretically, if you short a stock, it could go up as high as possible, right? It could continue going up forever. So your losses are theoretically infinite. And when you have 138% short interest on a company and you've got all this pressure buying and buying and buying, oh my goodness, that is what people have seen. So here's the question. Why am I bringing this up? Not only, I think it's interesting, and like I said, hopefully you're taking the right level of risk for your financial life. Why am I bringing this up? Take a look at these two charts. The companies that are the most shorted stocks on Wall Street have outperformed the overall stock market hand over fist the past 30 days, the past 60 days, the past 90 days. It has been outrageous. The companies that are shorted the most have outperformed the most. Is the stock market in the mother of all short squeezes? That so many people are expecting, the stock market can't be this good. It can't keep going up, right? We haven't had a pause. We haven't had a correction in a long time. We know the economy is not that great. How can the stock market keep going up? And people start shorting stock, but the stock market never drops. It just keeps marching higher, and those folks that shorted just eventually need to buy in. And when they buy, if there's enough of them, that starts putting more and more pressure for the stock price to go even higher. Are we in the mother of all short squeezes right now as an overall market? Now, I'm not speculating on that. Certainly this data suggests that very well could be. And to me, I would add this on top of the big pile of information that's telling me we might be in a bubble. We might be in a bubble. Could the economy continue to grow? Could the market continue to grow even if we're in a bubble today? Absolutely. Absolutely. So me saying this seems like bubble type behavior, this is not an edict that the market's going to go down tomorrow and you need to cash out. Absolutely not. But I would add this to the pile of growing evidence that, this could be bubble type behavior. Now, some financial folks say, no, there's no one shorting during bubbles. Yeah, actually, short interest is at record lows. And so that is at record lows. And yet still, those folks, those brave souls or foolish souls, I don't know which one, that want to short individual stocks, they are getting absolutely hammered here because those stocks that are short are outperforming the most. How do you apply this to your situation? Number one, I would expect volatility. I would just continue to brace yourself that that we could see some big swings in the market, especially when you're doing it with leverage, i.e. shorting or options, that sort of stuff. We could see very wild and very fast swings in the market. I'm not telling you to do anything with that. I'm just telling you to expect it. Set your expectations that way. Second, make sure your investment approach is connected to your overall financial plan. I don't know of anyone that is trying to achieve financial independence who it makes sense for them to be shorting stocks. If you're a trader, if you're a day trader, that's what you do, you're comfortable with that. And it's not as much gambling because you've got a system that you're manipulating, that you're hoping works. For the folks that are trying to achieve long-term financial success, and those of you that have, full-time jobs, day jobs, you're not day trading. So I wouldn't think you're out there shorting stocks. I would want you making sure that you've got a diversified approach of low-cost, index-type funds and a momentum strategy, so that if we do see this very quick and sudden and dramatic volatility, you're going to ride through it with these dollars, but you're going to adapt to it with these. And overall, that will resist you from taking too much control and going all the way in or going all the way out, and you'll have more balance and be able to navigate the market that way. So work with your certified financial planner. Make sure you're taking the right level of risk for your overall financial plan. And I'd be, for any of you out there that are thinking, that have watched GameStop and say, oh my goodness, this stock is up 100 and some percent in the last couple of days, up 300% in the past, month or so. Just be careful. Just be careful. Just be careful. Okay, that is tight. That is like gambling. So, all right, there you have it. If you need help, you can find us online, wisemoneyshow.com or corehorn.com. You can also send us an email, info@corehorn.com. All right, there you have it. Go out and take your next wise step in your financial life.